Hello folks, I'm L.A. Little and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened today and what does it tell us about tomorrow. You know, I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. So Wednesday's October the 23rd, so middle of the week, hump day if you will. Markets didn't think much of a hump or a bump. They, as usual, didn't want to sell off. We did have some of that pressure that I was actually looking for yesterday, and I kind of danced around last night thinking that it would still come. But the thing we got tonight, or today, is we actually got some sort of test in a couple of cases that gives us an idea of what the market's trying to do. So let's pop in here, look at the numbers, and then let's zero in on the charts themselves. So what do we got here? Industrials 53, 54 lower, 15, 4, 13. We had the S&Ps down 8, 1746 and a third. The composite down 22 and a half. 3907, the NDX down 21 almost, 3346. The Russell 1110, 1111 almost, 4.7 lower. Now the Russell was the one that gave the test early. That to me was kind of the key one today. Elsewhere we had actually it looks like we got gold selling off pretty good after hours. It was down today, it's down more after hours. Silver seems to be flat after hours. The bonds were up today. They're down a little bit more after hours. Dollar's slightly higher. We had some key areas hit in the dollar and in the euro in particular. And then if we go back to the crude and the copper markets, the crude was down, actually down a pretty good percentage today, and then bounced back around. It's up again after hours. That SCO trade that I believe I talked about last night was a pretty good trade. That was good for about 6 or 7% in 2 days. So sometimes those line up pretty well. As far as the markets, let's go over and look at that in terms of equities. So if we're looking at the equity market, we'll just start with the SPX as we usually do. The SPX yesterday, actually if we go back, I mean that was on the 21st, which was Monday. You get a little doji after an extended move. Over under says that you should go sideways to lower. Well, no, it didn't happen. Next day you go up. Today you pull back. You don't pull back with as much volume as yesterday's up day. You leave a little bit of a tail underneath it. Folks, this was trying to come back but didn't want to. But this particular one really isn't telling us anything. Now, I do want to bring up something I've brought up before, and this is something that's unique to neoclassical, and that is we have this thing called MTTF. And the mean time to failure basically is the cumulative probability of a failure occurring in terms of trend, in other words trend transitioning from the current trend, which is in this case bullish, and this is the long-term time frame on the S&P 500, to something else, which would be sideways. When you get up into the 70-80% range, you're starting to get up in the nosebleed area. In other words, it's you know, it's been there and been going for quite a while. This is not an exact timing indicator. It simply tells you that, you know, the time will come and that time is getting closer. In this particular case, you have it on the long term and you have it on the intermediate term, and it's getting to be nosebleed on both. And what's very interesting is you have a very relatively young one on the short term. So you can kind of imagine as these continue to progress a little bit farther, and as this one runs higher, maybe into the end of the year, then you get this one in nosebleed, that one's already nosebleed, this one's in nosebleed, and then it really starts to get interesting. So we'll see how that lines up. I'm only pointing it out because I think it's an important point. And that is, a lot of times when these all line up nosebleed, or they all line up the other way, which was the case in the bottom of the 2009 debacle, right? 2008, 2009. That's when you can get, you get bearish and extended in all of them. That's when you can get a bigger move the other way. So we'll see how that plays out over the next 2 or 3 months, but it's something worth bringing up. I was noticing it. I noticed it 2 or 3 weeks ago. I brought it up once or twice, but I wanted to bring it up again. So anyway, nothing here that's going to tell us anything tonight on the S&P. If we go to the Dow Jones, so the Dow was trying to get up into the 15,448. It did that yesterday, stayed in it, and today it comes back down out of it, leaves a little bit of a tail, comes into support now, and the support on the way back is going to be what should have been resistance on the way up. 15,139, we got as low as 15,366. So we're still, what is that? Let me see, 15,332, and we got as low as 15,366. So we got within like 30 points. Very top of support, 15,374 is the high of that support zone. So we come into it. If we look at that bar at 928, we came into it with 906. We don't have the volume. You come back into support. You can't break it down. You're probably going to flip around and try to test it again on the other side. IXIC, NASDAQ. Now the NASDAQ, the S&Ps, the Russell, and the NDX, they all have gaps underneath them. The NASDAQ, IWM, / Russell / NDX all have higher gaps. The SPX has a gap almost back at the highs. As we pushed up, right, we left this nice big gap up. We get a spike up. Now we come back. You leave a little doji here, and so now you have 3 dojis in a row. Sometimes that's called a tri-star doji. We can talk about that tomorrow if it actually fulfills, but essentially what we were doing is we were coming back towards this gap area. Volume over there is about 19.4. Volume here was 19.1. So you're coming back. You're not coming back with quite as much volume. You actually didn't do a test today, but you did come back. You couldn't trade lower, and you left a doji which could actually flip around and head back the other way. So that was not a clean tell either. The only one so far that we've talked about that is the Dow. The NDX looks the same and didn't get back as deep either. The one that did more interestingly was the Russell. Now the Russell, the low here, 1105.91. You got to 1105.35. So you got underneath the bar from the 18th, which was Friday, which was the gap bar. You got slightly into the gap. You did a flip around, right? You reversed off of that. You couldn't trade into it. Volume was 366.4. You did 371. So you came into it with slightly heavier volume, but yet it wasn't enough to break it down. You flip around. This one can come back and test it again, and probably will, but it looks like it's going to test this top of this bar first, which is 115. So the Dow and the Russell both argue for a little bit more of a bounce here, and then potentially try to come back. And that could all happen tomorrow. It doesn't have to be over multiple days, because we're just talking about a few points. This is 115. We closed at 111. So we're talking 4 points, which is nothing. So that's what the indexes, or how the indexes read as we look at those tonight, given today's action. So a little bit of a pullback, a day late, a $0.50 short, but it kind of echoes what we were looking at day before yesterday, which was that this thing should try to pull back. But this just shows you, like today, shows you just how strong this market is. And the thing that's most interesting about that strength is it's concentrated in just a few names. You've got, everywhere you look almost everything except for the Dow, which is kind of interesting because it's the laggard, is not price weighted. It's market cap weighted. You know, it's weighted differently. In that weighting structure, both in the ETFs and the sectors and in the indexes themselves, allows a few stocks to pull things higher. For example, if you look at the index, the top 3 stocks account for like 35 to 40%, I think, of the index now. And those top 3 are Apple, Microsoft, and Google. Google became the 3rd largest company today in the States. Apple, ExxonMobil, and then Google. So that weighting structure is such that even though there's 100 stocks in that index, 3 of them, just 3, account for more than 1/3 of the index. Those 3 stocks go up, the index almost has to go up. So that's what I'm talking about in terms of weighting. And that weighting structure is such that right now, it is what's holding these indexes up. Because you don't have the wide participation in the stocks. And I've been pointing it out, and I just want to make certain to point it out again. Let's flip through these sectors. I didn't look at these today. Let's see what they look like. So IYT is nothing, inside day. We did get hit on the SMHs. Let's see what the volume did. Yeah, expanded. Okay, so the SMHs, and here's the weighting structure. And I've been talking about this in particular because in this particular one, Intel's a large weighting. And Intel has been pulling this one higher because of money coming in as basket money. You know, when they come in and buy the index, Intel is one of the largest weightings, and therefore it gets buys. If you look at Intel itself, I'm guessing that this one came back today. I didn't look at it. Yeah, it did. And not as big, but it did come back the same way. And so, you know, when the general market comes down, something like this gets hit. So as we come down, right, we take away, what, a week and a half's worth of work. Actually, we're back down into September 16th. I mean, this is October 23rd. You know, that's a month's worth of sideways now instead of up. So if you didn't take your money, you just gave it all back today because you gapped down, you didn't get a chance to get out. So volume expands here, comes back. Let's see what it means. So it's coming into the big bar. It's pretty deep into it. This one is going to continue to weigh on the NDX for a little bit more because it looks to me like it's going to test lower. On the weekly, it's probably going to come back into that swing point high one more time. It's already done a retest regen there and didn't have the volume. That actually was good. So that was a valid one, a valid regenerate. But it does look like it's going to test back into it. That's 39.72 and 39.72 is right at that bottom almost. So that looks to be the target, this support zone you see down here at the bottom. A little bounce tomorrow and then some more. You can come back up to the top of this bar. If you stay in this bar, 2 to 3 bars, you're going to try to get the other side of it. So finally the SMHs come out. And you know, we've looked at these. Altera today was the latest blow up. I didn't look at Altera's chart to see how bad it was, but I saw it was down big today. Let me take a glance at it while I'm here. Yeah, I mean, this thing got smoked. I hope you weren't in that one. That's ugly. So huge volumes, gaps down. You never have a chance to get out. And we've seen others like this. Xilinx, for example. You know, gaps down on earnings, right? They come right back in and buy it, and then here it comes right back. It's going to come test that low again. It almost did it today. Didn't have as much volume. It's still going to come down and test it. And there's been about 4 of these now that have done this. So SMH is not a good scene. XLB. Okay, so this is an inside day. You had a gap up. This is doing a retest regen. The top is 43.78. And we didn't quite get to it. I would think you get into it tomorrow. XLE. Probably will hold too and bounce. XLE. So XLE comes off hard finally. So this was quote unquote the strongest one as it was going up. Got a nice, you know, confirmed breakout, which gets you a good push. Now you come back, you're going to do the retest regen. You're coming back with way too much volume. 85.74. You got into it. That's going to keep digging lower. It's going to get to the bottom of that bar, 84.97. XLF. So finally we're getting some damage on the sectors as well, a little bit. Okay, so the XLF doesn't look as bad. So the XLF is coming into the bottom of the zone, 2071, gets into it, closes over it. That's going to flip around and try to test back to the top. Remember, this is working on a weekly breakout attempt. Hasn't been able to do it yet. You know, it's trying to break over. It has the volume in the last two bars. This week's kind of a big week for the XLF. XLI. So the industrial sector. Remember, GE really kind of got this one going last Friday. Still hanging up there. Still doesn't have the volume. So it's doing a retest regen today. 47.72 at 12.2. Yeah, that's actually going to flip around and try to test that high again. So far that's regenerating. Technology comes into the support zone. Now this one's going to be really interesting because this was a huge volume expansion and it was at the top. So you got to think you're going to try to get back up there. You come into support, you don't have the volume. This thing's going to actually try to go back up there tomorrow. So far, IYT can trade higher, XLF can trade higher, XLI and XLK. So we got four of them. XLB a little bit lower, XLE wants to trade lower. The safety sectors actually were up again today. Now bonds were pushing up again today, which means yields were coming down, but then they flipped around at the end of the day. They may be done. This probably is in the same thing because on the weekly it's about done. So these might have had their run again. XLU looks like it actually did it. You see how it flipped around today at resistance. Let's look at the healthcares. So this sector just keeps hanging. That's going to try to work higher. It's going to try to test the top again tomorrow. XLY. And not a bad pullback. And that one actually can come back and do the retest regen. So you got about 5 sectors actually want to try to trade higher. So still, sectors aren't giving it up. Index is a couple signals to go higher. It looks to me like we'll get a little bit of bounce tomorrow. Tomorrow, Thursday, we're going to get some sort of a setup here that will tell us whether we can get a pullback or not. I mean, these markets, when you get a run, you know, that powers you up, and you know, it becomes very sticky as a result, right? In other words, nobody wants to sell. You know, I don't know about you, but you know, as the farther it goes up, the less I want to sell because I probably sold what I'm going to sell. So it gets very sticky at the top, and it doesn't usually want to give it up easy. You can kind of see that over here on a previous run. Here it came off harder, right? The volume expanded, but usually it gets sticky up there. So tomorrow, if it can't get back up to the top, right, gets up there and fails, it will tell us something. Right now, it does look like he's going to try to bounce. We'll see if it really can, because yesterday it should have came back and it didn't, which told us it was stronger. Tomorrow it should try to bounce. If it doesn't, that will tell us that they really are wearing themselves out up here. Let me go look at the FXE, the Ox markets, real quick. So this is doing a test on the weekly at the highs. 136.03 closes at 136.31, so it's over. It has no volume on a weekly. We got 2.9 there. We're 3 days in. We got 8, so it's not going to have the volume. Doesn't mean it can't break it, but the volume's not there. ABCD structure's done, and on the daily, you went over, back under, and you actually have a little bit more volume. So this looks like it's going to test a little bit more tomorrow. The weekly will be the big number on the FXE. Let me look at the dollar, because the dollar tried to trade back around today. It did, but it had more volume as well. So that's not a good scene either. Both of those can trade lower again. Let's look at the yen while we're here. Okay, so the yen, my opinion is as the yen gets up to the top, it's a short. And the top I'm talking about is up here at the 100.85. So anything up into that area, I guess these people are not going to hang up. Anything up into that area would be an area that I think you have to think about shorting this thing. Now, do remember though, on a weekly, this thing has just got a big range it's building out. So you could actually test up to the highs, 102.08, maybe even back up into here. That's where the volume is. But you can see resistance there. But the yen over time is going to go down. I don't see any other way. Bonds tried to flip around today. They were trading up. You can see the tail on the top up there. They came into some heavy resistance on the weekly. Those two bars we were talking about, the bottom was 107.76, the other one was 108.37. You got up into 108.73, so almost, we actually got into it, 108.37. So we closed at 108.30. So you test into the biggest bar, right? I think it's going to have a tough time here continuing. You've already had a nice big fast run. ABCD structure is not quite done, but almost done, and you're starting to lead tails. That looks to me like you're going to try to get a reversal. Gold is down, not that much, but down. Inside day, nothing there. We see it trading after hours down. Let me see what silver looks like, and then let me pop over to your questions. So you can reach me at 303-912-9110 for a text message if you want. You can't call me. I don't answer the phone, so that ain't gonna work. Nothing there on silver. Junk bonds, I assume they continue to go up, and they do. And so junk bonds are getting to a more interesting point too, as they're coming back up into these highs. This is where all the breakdown was, and that's where the real test is, and that's where they're coming. All right, let's see what your questions are. Hi, LA. Alan Farley, my friend Alan, invested. Oh, he tweeted this today. Correlation between crude oil and oil and gas stocks is much lower than most traders think. John Murphy covered it well in the international analysis. Please comment. Yeah, my buddy Alan. Alan's an interesting fellow. When I was out in Phoenix and visiting with him, we had quite a conversation, and there's all kinds of characters right in this world, and he's a mile a minute kind of guy. I mean, he just rattles off stuff, and I'm more reserved. I don't speak all that much. I try to make whatever I say important. But Alan, yeah, there's a point. I mean, is it highly correlated? Folks, in the end, it's always earnings, right? Is what can a company earn, and what does it actually earn? What's the projected earnings, and what's the actual earnings? So if crude oil goes up, right, does that make companies more valuable per se? It's the same thing with gold. If gold goes up, do the company get more valuable? No, but there's a correlation in that that traders trade them higher if they're going up versus going down, right? If the commodity itself is going down. Last night we talked about the crack spreads, and the whole ideal there being that the spread narrows or widens, and that's what leads to increased profits or decreased profits. Just because crude oil is $100 a barrel doesn't make a driller any more profitable than it would make a driller profitable if it was at 50, right? Because somebody's paying that driller to put the pipe in the ground. Now, if it's a wildcat and he's doing it for himself, then there's a higher correlation, because he's only going to get paid, A, if he strikes, and B, how much he can pump out. What does that reserve look like when he hits it? right? Because then he can amortize that and say, okay, that's how much I'm going to be able to pull out of this well. So there's some correlation, but yeah, I mean, I can't disagree with Alan. It's true that there's, probably traders think that there's more than there is. It's certainly not a direct one-to-one type relationship where if oil goes up $1, a driller is going to be worth $1.10 more, or 10 cents more, or whatever the ratio would be. It's not true. I mean, you can go pull up, just overlay oil. I mean, we could probably do it here pretty easy. Matter of fact, let's just do it. You can just overlay oil. If I put USO up, and most charting packages probably give you this ability, but if I put USO up, I put it back, about as far as I can go, given that it's an ETF, and then I go and take and put a comparison chart on it, and let's just put the drillers on top of it, right? That's going to be the correlation once it draws here. That shows us what that correlation looks like. Okay, so here's your drillers, and OIH has only been in for a while, but look how they're going up and this thing's going nowhere. I don't see any high correlation there at all. Okay, so let's put the XLE up, right? Which is the guys, now this should be a little bit more correlated because these guys actually own what's in the ground. But when you look at them, that correlation isn't there either, right? The green chart. And why is that? Well, I mean, there was kind of a decent correlation here, but then these things just took off, and this went up a little bit. It's a higher correlation than you see here, in that when this comes down, that goes down, that goes up, right? But look at this. This goes up, and this really didn't go up much at all. Why is that? Well, that's like the whole friggin' market. It just keeps going up. But drillers, but XLE, which is some drillers, but also, the big Exxons, ConocoPhillips, those guys, right, that own the assets in the ground, they're definitely a correlation between them, but they do other stuff too. They have refinery businesses, they have all kinds of stuff. So no, it's not a direct correlation. All right, next question. I thought of this in regards to the OIH and how strong it was before this oil sell down. Well, yeah, I mean, I'm going to pull this in while we have it here. So the black is, what do we got here? The black is the USO. So here's the oil selling down. There's those selling down. So I assume what you're saying is just because oil's dropping, these guys shouldn't be dropping. Well, no, they're going to drop. I mean, there is a correlation between them. It's just not a direct correlation. And I believe that's probably what Alan was saying, is that there's no kind of one-to-one thing here. The correlation coefficient is not that high. There is one, but it's not that high. And so if you think about it from that perspective, no, it's not. And a lot of times people make mistakes to think that because oil's going down, they're going to buy the 2-to-1 XLE. That makes no sense. You buy the 2-to-1 XLE, negative or positive, because you think the XLE is going to go up, right? And I've forgotten what the symbol is, Doug and Dig, right? Those guys aren't correlated to USO at all. I mean, they have nothing to do with it. They're based off the companies. So, you need to understand what's what. And what else can I say? There's not a correlation coefficient that's extremely high, but yes, there is a coefficient. This goes down, these will go down, vice versa. All right, I've run out of time here. That was actually, I dug around in that question a bit longer than I expected to. Folks, tomorrow, you got to expect some sort of a small bounce. It will be a measurement bounce. It will give you a measure. That's what it's for. Give you some idea of what the market wants to do. The market, at this point, hasn't given us great clues the last 2 days. So tomorrow we'll get another clue. We'll see how it deals with higher price. Can they extend it farther or not? And if they can, in what way? And then, of course, if they can't, then we're probably going to get a larger pullback finally. Have yourself a great night. I appreciate you being there. Tell a friend, tell two. As always, I'm L.A. Little. This is and was your daily TA wrap. Take care, folks. Good night.